Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES actually pushed above yesterday's high, where responsive sellers were active, but overall, ES balanced within the upper edge of yesterday's range, and we've seen a short-term bounce in Russell as well, and Nasdaq continues to lead to the upside. So the larger time frame bias continues to be bullish, and overall, we are in a pretty bullish environment. The only time that we would have to be cautious on the long side is if all three markets started heading down at the same time. So if there was participation on the sell side across Nasdaq, Russell, and the S&P, then it would make sense to be cautious on long setups and perhaps even look for a short setup. But until then, we really have to give more weight to that overall bullish bias that's very active in the market right now. And for that reason, we can still take shorts, but they have to be at relatively good trade location, and they have to be accompanied by some pretty strong real-time signals. And as long as that's not present, then we are going to continue to focus on long setups and really lean on that overall bullish bias. Heading into the open, the buy side is more dominant. The main catalyst today is the FOMC announcement at 1 p.m. Central Time. And until then, the market can continue to balance within a range, and off the open, market can really tip either way. The key level to keep in mind on the upside is the short-term balance area high volume node at 64.75. If we can get a high momentum breakout above 64.75, then from there ES can go up and tag the naked VPOC at 2069 and the initial resistance zone at 71.5 to 73.5, and responsive sellers can be active at the initial resistance zone ahead of the FOMC announcement. On the downside, we have short-term support at 57.5 to 59.5, followed by the prior VPOC at 55.5, and then initial support 51.75 to 53.75. Now, these are short-term support areas, but we have to make sure that the underlying environment actually supports a long setup here. So what that means is that we don't want to see short-term weakness on Nasdaq and Russell and the S&P kind of across the board in unison. As long as we don't have that situation active in the market, as long as we don't have a lot of negative signals like sustained downside momentum, continued broad market strength with the Russell selling off yet again, and then Nasdaq also selling off, as long as we don't have those signals in real time, we can still lean on the short-term areas of support. But you have to keep in mind that right now, the context that we're in, we've had a pretty decent size balance breakout to the upside last week, and now we're simply consolidating and resting after that large move. So overall, the pattern is bullish. And then within this balance area, there are short-term support areas and short-term resistance, but the primary support and resistance are really at the edge of the balance, right? So that's 51.75 to 53.75 and 71.5 to 73.5. And then within the balance, the support or resistance we have to be a little more careful with. So 57.5 to 59.5 is short-term support, but breaking that support zone doesn't really mean much. It would just be a break below the overnight range, which is a very narrow range developed on very light volume. So it doesn't really mean a whole lot. And that's why you can still find buyers at 55.5 and 51.75 to 53.75, as long as, again, we're not seeing any strong signals of the market selling off, and as long as Nasdaq at least is still holding up okay, because that is the market that has been leading to the upside. And if we start seeing weakness in that market, where it actually starts selling off in a stronger way, then we would have to be careful, because that would be a stronger signal of overall market weakness. But until then, we do want to give more preference to the buyers and be a little bit more cautious on the shorts. Again, it doesn't mean that on the day time frame a short setup cannot present itself. Yesterday we had a very clear-cut short setup at the pre-market resistance zone, and that was a very good trade. So it can develop. It's just that it needs more, right? On that short setup, there were several reasons to take it. So don't lean on just one reason to short the market in this overall bullish environment. If you have multiple reasons and you're getting good location, then it can work out. But if you're shorting at an aggressive price near the bottom of balance, or right at support, that can be problematic and more risky. So the overall bias is going to continue to be bullish, and that would be bullish even if we did get a short-term break below 51.75. See, right now the larger time frame is so clearly bullish that it would take a pretty significant pullback to invalidate that bullish bias. And that's why even in the event that we get a deeper pullback, the buyers would actually still remain in control on the larger time frames. Now, early in the morning, like I said, ahead of FOMC, typically you get two-sided movement, but that bullish short-term skew can remain. And then once FOMC is out of the way, then we can get a directional move. Now that is a news-driven move usually, and the market can and typically does resume the trend that's already in play. So as long as there's no any unexpected announcement, then so far the market is set for an upside move and at least a test of the balance high here at 71.5 to 73.5. In the event of a strong breakout above the initial resistance zone post FOMC, ES can tag 77.75 to 79.75 and potentially 83.25 to 85.25. Those are active upside targets in the event of a breakout above the initial resistance zone. But the short-term target, which can get hit even ahead of FOMC, is the naked V pocket 69 and 71.5 to 73.5 above a break above the 64.75 high volume node. So right now we are trading in a short-term balance, but within the context of an overall bullish move. That's really the backdrop that we're in. So off the open, let's just see whether we can get a continuation of that. As long as we're not seeing any strong signs indicating a move lower, we're going to continue to focus on the long side and anticipate a move up to 69 and 71.5 to 73.5. We'll be a little bit more conservative ahead of FOMC simply because of the limited range potential that we usually see ahead of FOMC, and then we also have to keep in mind that the volume continues to be fairly light in this market. So that's another reason to be a little bit more conservative ahead of FOMC. So keep an eye on the momentum situation, NYC tick. Let's keep an eye on the Russell just to see if we can get a little bit of a pickup in that, because so far the Russell has been weighing the markets down, and despite that, ES and NQ have been performing fairly well. So once that weight gets lifted and Russell starts heading higher, then we can get some better buying in these markets. So those are the main thoughts heading into the open. Let's see if the buyers can maintain short-term control, and we'll take it from there.